All right, good afternoon or evening, everybody. Hope you're doing well. Recap for today: trade reviews. Two to talk about. SpaceX was a decent day two setup, so we had this big breakdown under 172 yesterday, and then today we got this setup, not as playbook as what we typically look for, but it's an in-play stock and worthy to review nonetheless. So this 150 level really key because it is the IPO low from day one. And then in the pre-market, we broke that, put in a higher low, and then you got this wick off of that pre-market low. So if you're watching it closely, I was looking more so at this front side rejection at 154. But if you're watching and see it turn, even a late entry through 154 was scalpable, right? So you just can kind of do some simple logic here in that, given how big 150 is, and what in the pre-market low holding perfectly, is you can see that sellers would be offsides. So at least in the interim, that can be a nice kind of squeeze for the longs as shorts. We're looking for that pre-market low break, didn't get it, and then it's like, okay, well, what do you do? And then you take out 154, which was where the rejection happened. That's even more fuel. So that was pretty good. As far as SPX goes today, I just want to quickly talk about the spread that I put on. So I put on a call spread. I'll just kind of highlight where the strike was here. So it was a 7,400, 7,405 call spread. So what that means is I'm placing a bet that the market will not close above 7,400. With that, we collect about $2.50 or so in premium, which is really good for a spread because we put this on right around here, I'm sorry, it was right here, about 940, 950. I think it was 954 actually, because I set it up on here, and it didn't save. Hold on, let me put it over here. Pretty sure it was 954. Let's just get that loaded. For some reason, it looks way different. Okay, there we go. Just a scaling. Okay, so essentially, when we were testing this here, I was looking at the gamma profile, and so our variables for the day are a trend day to the downside, mostly because of the suppressive charm paired with the positive gamma and a peak below us. Now, we did see buyers step in around some pretty key support in the market, and then we got this kind of vacuum up to the path of least resistance. So, it's only a trend. Obviously, if sellers push through and continue, we would likely trend right into this. Because buyers stepped in at that key spot, you have positive gamma supporting things. And I will say this, the charm until later in the session was fairly light. So you have to kind of take it a little bit with a grain of salt. But we did have this path of least resistance, this valley in gamma to refer to. And the reason I went with the 7,400, 7,405 is because when you look at the breakdown by strike, we had a pretty large positioning here at 7,400. This is usually reflective. And we did just push right through it. Now, the thing that I was thinking through with this is even if it didn't work initially, and this is one of the benefits of spreads because your premium burn is on your side. We had this level above us around 7,420 where the path of least resistance was. And then also you look at the nodes here and we had some positioning on the way up and then also around 30. So to me, I was thinking, well, given the influence of this polar going down into that 73.90 pivot into the end of the day and charm increasing in magnitude as you get closer to the end of the day, it's stayed suppressive and became more suppressive as you get closer to the end of the day. And you also have the charm flip line there as well. Those things made me think that, well, as long as we don't, spike through the charm flip or through the polar, then we can just be suppressed lower and it might come close. Like my thinking was it might actually pin around 7,400 or at 73.90, 7,400. My strike selection was 7,400, 7,405. So, I was basically kind of just waiting to see. Once we got this rejection, that was like, okay, good. It gave me reason to hold. And then as long as we stayed below this area, this 7,400 path of least resistance, then the charm was in my favor. If we would have flipped into supportive charm, that would have been kind of game over because then you have light gamma and supportive charm, which is our squeeze combo, and you can see some upside. So basically, that was the logic. There was big positioning here, but a good example of it doesn't mean that it has to work every time. Buyers were able to get us through that with relative ease, I would say, and then we end up rejecting the next one, and then obviously the rest is history. We sold through, and then on the retest, managed to stay below it. So all in all, it worked out. I don't have too much else to add to that. I think it's pretty simple. I was just piggybacking off of that, and I really like doing that with spreads because your risk is really defined. Getting $2.50 a premium, you're only risking $2.50. So getting a more one-to-one risk reward on a spread is quite good because the odds are significantly higher that you're gonna, the options expire worthless. So yeah, that was that. Outside of that, S&P bigger picture thoughts. We've been talking about how there's a little bit more of this risk off attitude, big potential to chop within this range. I've been kind of circling this for the last several sessions now. If we fall into this, it can just be kind of messy. So things don't look awful. They don't look great either. When you pull up the EMAs, we're just right around the 50 EMA. So it's not necessarily concerning from a long-term point of view, but you have to be careful not to blend long-term into day trading in the wrong way. So you want the big picture context, but you have to, make sure that when you're day trading, what you're doing is relative to the time frame that you're trading within. So this gives you the context, and then the way you execute has to be relative to that time frame as well. So this is basically a scenario where the bigger picture is a bit choppy, possibly a nice bounce spot if the market reacts here, and then we see. And if not, well, there's certainly room to the lows that were put in, and we could sell some more. I mean, we've seen what has happened when there is a very strong theme in the market. We have MU earnings. So you have your 921. Some of your closer EMAs starting to point down with this gap down. So this is an opportunity nonetheless for sellers, right? If MU misses and the AI trade starts to unravel, you have to remember the AI trade is up hundreds of percent, right? So the market could correct 10% or more, and those trades could correct 20%, 30% or more, and they're still up a lot, right? So that's something to think about as we get closer to MU tomorrow and see how the market reacts. Now, I know a lot of people struggle when the market's pulling back. I would encourage you all to think about it like this. If the market's moving, then you can make money, right? It doesn't matter if it's up or down. Really, the only characteristic that's a bit different with the downside versus the upside is speed. Usually it's a little faster. Not always, though. There's plenty of trend days as well that are grindy in nature. But I would encourage you all to welcome volatility, because when the market moves, we can get paid. Now, it does mean having better stock selection becomes even more important. Some of the forgiveness in a very trendy market that's there goes away. So it kind of weeds out the traders that, don't know how to pick the right stocks. And, we don't always get it right, but generally we're aligned pretty well. We're 3 for 3 this week, a little bit of a rougher week last week. So, we'll just continue to be really focused and selective. So, and that's what it's all about. Watch list for tomorrow, pretty simple. Again, I'm not, I'm looking through everything, and I'm just really focused on keeping it simple until things change. Being more of a sniper is my MO these days. SpaceX, just something to watch. If it breaks the lows, it breaks today's high, something to look out for. SPX is a pretty good looking continuation setup, actually. So under today's lows, I like that for continuation. There's really not a whole lot of support. 73.30 maybe a little, and then you start getting into 7,300. So if we don't just gap, right? I mean, we've been gapping quite a bit, and it just makes it kind of annoying. IBM, I say that, but then also, like, once the theme is a little bit more established, can give you more confidence to hit some opening plays. IBM looks good. So this is a continuation setup, day 2 continuation setup. You can see the 921s being pinched here, acted as resistance today at 265. So break above that targets this May 29th low at 273.67. NBIS, I like this 300. We really are reluctant to get through 300 after some really volatile moves, yet we're still holding well on dips. So overall, this is like able to catch its breath in a way while staying up around the highs and rejecting it several times. So to me, the odds just increase more and more that this has a really nice move through 300 once it finally goes. So, we don't know which attempt is going to be the one that goes. But when it does, I would expect it to be pretty strong, just given the way this name's acted. That's what I got for you. Nothing else looks great to me. There's like a bear flag on Apple, Tesla. Some of the Mag 7s are getting smoked here. And even the downside doesn't look all that great to me yet. That can certainly change. So yeah, let's focus on MU. We've got some economic data at the back half of the week that could definitely get things going. If you're struggling, guys, make sure you're reaching out. Make sure you're asking questions. I've had some good conversations with you all. I've noticed a theme. Many of you do vent a little bit and ask some questions and then apologize for it or think you're further behind than you are. And actually, a lot of the truth and growth and trading is hidden like within the things that you guys are venting or talking about. All things that every trader goes through, and many of you are way closer than you think. So don't give up. When the market's tricky, it's good to reflect and ask yourself, keep it really simple and ask yourself what's working, right? And if nothing's working, then you just size down and wait. That's the market. The market's not the same every month of the year. So you have to separate it from being something personal. The market's not trying to attack you, and versus your skill, right? Skill is not relative to streaks or the amount of wins that you have. It's about efficiency. So when the market's not offering good things, it's how are you handling that is a skill. There's not a trader on the planet that is just going in every day making a ton of money. And if they are, we probably don't know who they are, right? Because they're not going to tell you their edge. All right, so that's that. Have a great rest of your night. 45 minutes, we've got the webinar. It is pretty simple. It's things you've heard me rant about. If you're in the mentorship, you should already know. That doesn't mean you can't join and support. If you're around, ask some questions. If not, though, the recording will be available, and you can check that out if you want. Once we get going, so this is like our public launch of the accelerator. We launched a soft launch to you all first. Once we get going with that, we'll schedule a workshop for you all specifically around a topic. So if there's a certain topic that you all want, I have a list. But if there is something specific you want, and I can post a list and everyone can vote on it or something like that could be cool, let me know. And, the goal will be about once a month to do a little bit more pointed workshop around the specific topic. So let me know. Otherwise, have a great rest of your night, and I'll see you all in the morning.